Okay guys, so welcome to the channel. Today I'm going to teach you the trade that we took inside of the signals room. So I'm going to teach you how to trade the data high and the data low candles. So at 8:30 today we had core CPR data coming out. So we had to wait for the core CPR data to play out, and then we were going to look to trade inside of the macro session, which is 9:45 to 10:15. It's the first day of macro, because we all know the futures market opens at 9:30. So what do you want to do? The first thing you want to do when you know that you've had news prior to the macro session, you want to be marking out the data highs and the data lows. So that will be the candle at the time the news come out. So data lows, you mark those out, and it's just as simple as that, guys. So 8:30, 8:30. So you only really tend to do this when you have, in our case, we had a large move to the upside. So let's see how this plays out. I don't know what this line is doing here. Let's get that. Alright guys, so you can see here the short-term high has actually been taken. So I'm starting to pay attention now. I'm looking at the charts. I'm starting to go, okay, we're starting to get a setup here. I'm letting the guys in the signals room know. I'm starting to see something. Keep your eyes peeled, essentially. So, and then what do we have here? So, short-term high, lower high, lower high. It's important. Why is that important? Because now you have your displacement candle. Alright, this is the important thing. So what's a displacement, you may be asking yourself? A displacement is where price has broken out of the trend that it's currently in. So you'd mark out the short-term low that has been taken by a short-term high. So the short-term high's happened and it's broken below the short-term low. It's a little confusing if you're new to the game. If you're experienced, you understand exactly what I'm saying. So we can see here, short-term high has been taken, wicked up. So we understand here that the trap's been formed. Anybody that's a breakout trader or trading towards the data highs, because they're just trying to quickly snatch 20 points or whatever, they're induced into the longs and they're going to get trapped. And we know this because of the characteristics of the candlesticks themselves. So we can understand the trap's been formed. Any breakout traders or anybody trading towards the data highs has been induced into the trap with longs. So everybody's going long inside of the market. Market maker will then snap price down, give us a market structure shift, which has then broken the trend. So now we know that the market maker has acquired enough liquidity in order for him to fulfill his position to go lower. Okay, so he has to induce people into the market in order to rip price in the other direction. That's the business model. You need to understand the business model. It's one of the most important things, so that you guys, when you're in the charts, you're essentially playing detective. What is the market maker trying to do? What are they trying to make you think? And you want to be doing the opposite, essentially. It's a quick breakdown. So, what do we also have inside of here? If you guys have watched my other videos, you'd know. But if you're new, I'll break it down for you. So right here, we have our breaker block. That's a breaker block. So, you're asking yourself, what's a breaker block? Let's have a little look. So, same thing, come up, tap the high, come down. This is what you're looking for, M formation at the highs. And then the breaker block will be the short-term low before price takes out a short-term high and then displaces lower. So right in here, that's your breaker block, okay? That'll be your breaker. So what does this then entail? This is a unicorn model setup. And why is this valid? It's valid because we understand the trap set prior. This is the trap inside of this zone here where it's taken the short-term high, wicked it, and then shot down with red vector candles, which if I turn these on, red vector candle as a displacement. So that's the other advantage that we have inside of the signals room, that I also apply the PVSRA method. So I can get a better understanding of market makers' behaviour, because he's pushing price up, green candle, green candle, green candle. There's more volume coming into the upside. Retail traders are induced into the longs. So I know right now I'm not looking at taking longs, because this is going to be the downfall of the people taking longs. His market maker has induced them into the trap. So then we also have a fair value gap that rests inside, and it's getting respected. So fair value gaps are important that they get respected. People say fair value gaps all the time, but nobody actually explains why a fair value gap is a profitable concept to use. It's only profitable in certain scenarios. You can't just take a fair value gap anywhere and expect it to play out. And you need to look at the behaviour that the candle represents inside of that fair value gap. If there are orders to the sell side inside of this candle right here, you'll get wick up and then shoot back down. And that's how we know there's strength in order to the downside. Market makers pushing price down. There's order stuck in this air. There's order stuck in this area. He's come back, tapped those orders, and then shot price back down. So you can't just take any fair value gap because they're not going to work. It has to be entwined with other concepts. It has to be entwined with other confluences. You can't just be taking any fair value gap because they're not going to work. You know, there has to be a story behind it. You guys need to really think of the business model. So right here, I'm eyeing up this position. I'm seeing that it's respecting the fair value gap. You're going to put your stop at 25 points. If it's any more than 25 points, just take the trade off the table. There's absolutely no point being inside of that trade. So we can see here, our stop clearly rests outside of the fair value gap. So we understand we can take this trade. This is a clean setup that we can take. Not every setup is going to work. I don't want you guys to get this unreal expectation that every single trade that you guys ever take is going to work. It takes time. Anybody that's trying to tell you that you're going to be making profit in 1 month, 3 weeks, whatever, you're not. It's going to take you 6 months to get this dialed down because you're going to be over trading, you're going to be over leveraging. All of these kind of things you're going to be doing that you need to get rid of. And if you're an experienced trader and you've traded support resistance and trend lines and all that bullshit, you're going to have a better understanding of risk management. Risk management is one of the most important things that you can actually implement, but it does take time. Okay, it's not something that anybody can just do. I had to go through 3 to 4 years of losing trades and losing my mind and not understanding what's going wrong for me to actually wake up and go, look, something's got to change, and this is the change. So it seems simple when you're just looking at this. You're thinking, yeah, that's easy, I can spot this all day. But you're going to hit 1, you're going to hit 2, you're going to hit 3 trades in a row, and then you're going to over leverage. You're going to go, sub this 1% rule. I'm just going to full port the account, you know, it pays every time, wiped out. Okay, so make sure you're sticking to all your other rules as well. Don't just listen to my rules, stick to your own rules, ones that work for you. The ones I've created and made for myself work for me, so that's why I implement them. And I try to push it onto you guys, but you're your own people at the end of the day. If you are not happy with the rules, change them so slightly, adjust them to fit your characteristics. Everybody has a different personality. But I'm rambling on now, but you can clearly see our stop is in place inside the fair value gap, and we're targeting the data lows. And just like that, it's as simple as that, guys. Inside the signals room, because we have a bit more of a conservative approach to price, as soon as we had hit our first TP, we moved our stops instantly to break even, and our second TP was at the short-term lows. So we were out by about 80%, and we had secured around about 72 handles. I think it's slightly less. I think we kind of put it at the bottom of the weight. About 63 handles that we managed to secure. But of course, if you are just going to leave one position going, so you're going to enter on the fair value gap, and you're just going to leave one position until the data lows, don't move your stop loss. Just let it run out. For me, we have a more conservative approach. We're trying to just secure little bits of profit here and there, here and there, here and there, and stack the accounts over time. So by the end of the year, you have 6 figures plus. That's the aim of the signals room. So I hope that has helped you guys understand the thought process that you must have when you're applying yourself inside of these markets. It's not as easy as everybody sells online, and the quicker you come to terms with that and you realise this is essentially educated gambling, but with an edge. You have an edge over the casino, but over time you must perform your edge at the exact same time and the exact same criteria. You cannot divert from the plan, otherwise you no longer have an edge. You have a gambling problem. I'll see you on the next one.